Welcome back to Trading with CJ. Today we're giving you a brand new penny stock that I have never spoke about on this channel before. It's definitely exciting. It's got a lot of room for growth. I'm going to be giving you my thoughts on it, a stock analysis of course, price predictions, and whether or not I own it / will be buying. I have spoke about this one on our Discord before, which is completely free to join. We now have a community of over 2,500 investors. You can join that if you want. It is completely free in the pinned comment or in the description. But nevertheless, let's get straight into this one. If you appreciate all of this, please go ahead and smash the like and subscribe to my channel. That really is appreciated by me as well. So without wasting your time, let's get into it. We are talking about ticker symbol CIDM. This is a penny stock, and at this moment in time, it currently trades for less than $2 a share. Okay, this has a market cap of around about 315 million. And this is basically very similar to your Netflix, your Amazon Prime, and stocks like that, okay? However, this is obviously on a lot smaller scale. This is the premier independent content distributor known as Cinedigm. Cinedigm Corp is the leading independent entertainment studio in North America, widely recognized for its film, TV, and digital production, digital cinema, OTT channels, and content and marketing distribution. It really is in a sector which is growing. Okay, people love watching films, documentaries, etc. all online these days. People love this sector. It's got three main divisions here. Okay, distribution is its first one. Since the inception, they've become a leader and a forefront of digital transformation of content distribution, adapting to the rapidly transforming business needs of today's entertainment landscape. Cinedigm remains a change-centric player focused on providing content channels and services to the world's largest media, technology, and retail companies. We're going to go into some of those companies in just a bit, but you can see they service and entertain consumers globally across hundreds of millions of devices. So the distribution side of things, I think we're quite familiar with that. We have the networks as well. They manage and operate 9 unique digital first networks under their digital networks group. We're once again going to go into some of them, but it does list off some here, okay? Combat Go, Documentary Network, Docurama, family-friendly channels, Dove and Dove Kids, the female-focused Millennial Network, Asian Pop Culture. The list goes on, okay? There's 9 there in total of these different networks at this moment in time. And then they have the digital cinema. Cinedigm's digital cinema pioneered digital cinema for the US exhibition, negotiating distributor, exhibitor agreements that offset theatre conversion costs. Okay, so a digital cinema here, and you can see here, they've now deployed across nearly 12,000 digital screens. The company's partners include 20th Century Fox, Disney, DreamWorks, Lionsgate, Paramount, Sony, Universal, all the big names, Warner Brothers, etc. Big names there, and hundreds of independent distributors worldwide. They are well positioned at the moment, okay? This is a much smaller company than your Netflix, your Amazon Prime, etc. However, they're definitely getting their foot in the door with this, okay? And definitely get a piece of the pie. They have some big partners here. And if we have a look around their website, you can see Cinedigm's movies and shows catalog. They have over 52,000 films. I'm just going to let these scroll past as I'm saying about this. But they've got TV episodes, offer a range of entertainment choices from award-winning documentaries, star-studded stories, groundbreaking new series, anime, horror, cult classics, you name it. It's all there. You can see all of these, okay? Really interesting platform as well. If you haven't heard of this company, maybe you might just want to sign up and become a member. But yeah, it's definitely exciting, okay? It's an alternative out there, an alternative option, and a growing one as well. So this company provides premium feature films and series to digital platforms, and they have some big partners, okay? Not to mention iTunes, Netflix, Amazon. You can see here, these are also some of their distribution partners, okay? You can see Hulu, Amazon Prime, Now TV, Sony. Huge names on here. Apple as well, Amazon Fire, YouTube as well. All the big names on here. That is their top distribution partners. Largest independent studio in North America. And you can see here more than 60,000 digital and retail storefronts, reaching 93% of connected devices while expanding its footprint in China as well. This company has big links with China right now. Bison Capital are the owners and majority of Cinedigm's outstanding common stock, okay? and Bison Capital has made multiple investments in film and TV production. This company is a Hong Kong-based investment company with a focus on the media and entertainment. So Cinedigm is now working closely with Bison Capital to develop plans and forge partnerships to release entertainment content and develop OTT channels in China as well. We know China is a rapidly growing market as well, releasing Chinese content and new OTT channels in North America. So that's something else definitely to look forward to there, on top of all these other things they're doing. Here are some of their network channels. Okay, Cinedigm's streaming advantage broadens consumer reach and drives revenue. You can see a list here of big names as well. Bob Ross channel, Comedy Dynamics, Dove channel we mentioned already. So yeah, more channels there as well. This is growing and growing. Let's have a look at some news around this company, why this is potentially a really good investment going forward. This is the first main bit of news I want to touch on from a couple weeks ago. Rockbot. Rockbot offers Cinedigm's streaming channels to its 20 million monthly viewers. Okay, that is absolutely insane. Bob Ross channel, Dove channel, Fashion Box on the Google and Universal Music Group backed out-of-home media streaming service. So we just touched on these, okay, and this is thanks to Rockbot TV. This was today they announced that they have a content distributor partnership with Rockbot, who is a leading home streaming TV service to distribute 4 Cinedigm video channels to Rockbot's business-to-business streaming media network. General manager here of Cinedigm says, "We are excited and eager to partner with innovative and emerging platform partners like Rockbot because we know the future of video streaming extends beyond the living room." So this was our first really good bit of news, okay, a massive partnership. And then just a couple of days later, and this is something I want to point out here, this company loves putting out news, okay, there's constantly good news, something we like as investors. We like to keep getting updated, we like to see good news coming in. A few days after that was this: Cinedigm acquires Screenbox, a popular streaming service for horror fans. Now, I've not heard of this company, but it's definitely big, that's for sure, by reading about the statistics, etc. Now, this has more than $1.1 billion in box office revenue in 2019 and an estimated $2.3 billion in global revenues. The horror genre is one of the most popular and profitable genres in the entertainment today. Cinedigm will leverage its substantial horror and thriller content library, app technology, and Matchpoint distribution platform to rapidly expand Screenbox's content offering. The company will relaunch the service apps and dramatically expand distribution to Cinedigm's 900+ million global connected device footprint. And they also plan distribution of Screenbox to its base of third-party channels and partners such as Roku. We know a lot about Roku, Comcast, Sling TV, Dish Network, and more. This is the really key point of this here, okay? The company anticipates the service could reach 7-figure subscriber levels within the first 36 months. So 3 years after the acquisition is completed, they're expecting this to reach 7-figure numbers, which is absolutely insane, amazing growth coming for this company. We say this is the largest horror website with more than 20 million monthly visitors, and they've now had this as an acquisition. So great news. Now, literally just a couple of days ago here, they released their earnings. This is what we want to see. We want to see these numbers looking good, okay? Are they going to be looking good? Well, let's get into these earnings, okay? Some of the highlights from this. The revenues were $10 million, and the streaming channel revenues were up 85%, which is great, versus the prior year quarter. Now, I would imagine a company like this, given everything that's gone in the world, the revenues would be up, okay, in terms of the streaming, because people are sitting at home, they want to watch films, they want to watch these, etc. Cinemas are closed, so that's probably going to be down. However, the streaming side of things is really going to be up. Ad-supported streaming channel revenues also increased 79% over the prior quarter and 150% for the previous year prior quarter. Streaming digital content licensing is increased by 34%, driven by partners such as Amazon. We've mentioned they have partners with Amazon as well, which is, they have all the big partners, this company, okay? They're getting their foot in the door. They're making themselves known, that's for sure. They have combined OTT streaming and digital revenues that increased by 58% versus the previous quarter and 36% over the year prior quarter. All of these numbers are going up right now, and the core business EBITDA for the 3-month also increased 1.8 million or 376% versus the 3-month period from 2019, and increased 4.7 million or 138% for the 9-month period. And this is another thing we really want to see here. We're getting all these numbers coming in, great, but what's the debt like? Well, the total debt was reduced by 25.7 million. Okay, that's absolutely huge. I have been doing some direct offerings as well. I would have summarized that, but this financial report basically summarizes it anyway. So 51% there in debt reduced from the previous year, including conversion of 15 million of convertible notes to equity at a $1.50 per share. The $1.50 is slightly less than where we are now, but we have been on a bit of a run. We will go into the share price. We have been on a bit of a run lately, but yeah, it's not too far off its current price, to be honest. Some of the business highlights here, the streaming minutes were in the quarter were 907 million, which is a new company record. Like I said, we do imagine that is going to be going up. And this is a growing sector. I'm not too sure about cinemas these days, but definitely online streaming at home, etc. This is definitely there's room for another big player in the market, in my opinion. Monthly ad-supported streaming channel viewers rose 22.6 million, which is another 303%. All of these numbers are looking really, really good. I'm not going to cover too much more on this because you're getting the gist of this, okay? You can definitely check this out because there's a lot of good things here. And the channel portfolio has also been expanded, okay? They state on their website 9, however, as of this financial results they've just released here, that it's actually now 25, which are either launched or currently under contract, so will be launching. So just some of the highlights from this, they said they've significantly reduced their debt, which we know about. They have substantial cash reserves now. They are extremely strong third quarter financially, and every key streaming growth metric is increased substantially as well. So things are looking good. This share price really should be going up a lot more. The only thing with this one here, from the quarters, it has been going up throughout the year. However, it does say here revenue from 10 million was a decrease of 13.5%, which was 11.5 in the previous year, and that is due to the expected decline in the legacy cinema equipment business and the negative impact of COVID, of course, on theatrical revenues, temporary DVD warehousing, distribution centers, shutdowns due to COVID, etc. So with that in mind, the revenue is slightly down from the previous year here. But however, if we take about the quarters, the last 3 quarters, this has been growing and growing, and the numbers, as you've seen from this financial report, are definitely going in the right direction, that's for sure. And they're getting more and more acquisitions as well. The only thing with this one, we would like the profits to start coming in because the company reported a consolidated net loss of 9.7 million for the third quarter, and that's excluding the change in fair value from the equity investment, so it will be slightly less than that. The operating net loss was 2.9 million or 0.2 per share. In the driving part, the loss of theatrical revenues in the legacy cinema equipment business due to COVID. So when that even comes back, these numbers are going to look a lot better than what they currently are as well, okay? The cash is also 26.2 million. Things are looking very good. The numbers are good here. And yeah, as this grows and grows, I'm sure this will start going and making some real money here and hopefully making investors some real money as well. Let's jump into their share price, see what's going on. This did run up to $2.14 per share just a couple of weeks ago, okay? And it's dropped down a little bit. We're only down 10%. And in reality with this, 10% is not that much considering the rest of the market right now, you're probably aware, has been selling off dramatically over the past week or so. So to only be down 10%, that's not too bad. This is at the time of recording. It might look slightly different by the time you see this. But yeah, numbers have come out. The numbers are good. The acquisitions are good. There's no real negative news around this. Everything we're seeing about this is going in the right direction. So that leads me to the question, do I hold a position in CIDM? Will I be buying into them? Well, I do hold a position in CIDM. I let the Discord know when I bought this one, which I bought it around about a week ago, I think. So at the moment, I am pretty much break even or just ever so slightly down. But yeah, I would happily add to this and average up. So yeah, at the price you're seeing this right now is pretty much the price that I actually bought in at. And this is more of a long-term investment for me, I do believe, because, I want them to start making profit. I want them to start making some real money. However, more and more acquisitions could send this up and be a short-term catalyst for this company as well. So I do see benefits in both of that, short and long. Personally, I'll be going long in this company. I have no reason to sell out. I actually really like the direction they are going as well. Like I say, they're also looking to get some Chinese channels, expand into that sector. They get more and more acquisitions. The revenues are going up as well. And the online streamers, the online viewers is all going up. The numbers are going in the right direction. Yeah, I really like this company. And let me know in the comments below, have you heard of this one before? Is this one that excites you? And also, if you want to join our Discord and get these ones as I buy, like I say, this hasn't moved too much since I've bought, but sometimes, if we go back a week ago, these ones would have been shooting up by now. It's just the market at the moment is kind of a teetering in the middle ground at the moment. But yeah, thanks for watching. And if you enjoyed this video, please go ahead and smash the like and subscribe to my channel. We're bringing you more and more penny stocks to buy, and I really do like this company. Let me know your thoughts, but I am not a financial advisor. You should always do your own research before investing into the stock market. And until next time,